Hello and welcome. Let's start with something simple. Most people have general idea of what insurance is. But before we dive into embedded insurance, let's take a moment to really understand what insurance means. So imagine this is you, a hardworking person who saved up for years and finally bought your dream car. You love driving it, especially through the countryside. Nature, peace, the open road. One day while you're driving at the countryside, while enjoying the scenery, you hit a bad patch of road, lost control, and bam, crash straight into a tree. The car is badly damaged. You've also suffered some injuries. But just focusing on the car first, it needs to be towed, assessed, and repaired. And those repairs they're expensive. Maybe you dig into your savings to pay for it. Ouch. There goes the years of hard work and savings. And what if it happens again? Or worse, what if you were an Uber driver and this car was your livelihood? No car, no earnings. This is exactly where insurance steps in. At its core, insurance is a beautifully simple idea. Let's rewind a bit and imagine it was all just a bad dream, the kind you might have after buying something really expensive. Now imagine a few of your close friends also had this bad dream, each one worried about something happening to the car they just bought. So next time you meet, someone says, why don't we all chip in a little money regularly and build a safety fund? After a while, the jar fills up. If something bad happens, like a crash or an injury or job loss, this money can help cover it. In a way, you've all created peace of mind. You sleep better. You sleep better at night knowing that if your car is damaged, there's a shared fund that can help with the costs. To me, this is what insurance is. It's actually a safety net. It does not stop bad things from happening, but it helps soften the financial blow by sharing the risks. Compare paying entirely from your own savings versus using the pooled jar of funds. That's the difference between being uninsured versus insured. Oops. But before we wrap up, let's quickly go over some key terms in this world of insurance. Let me clean the board a bit. Do we still need the car? Nope, gone. Also, while I can draw stuff, my handwriting, not exactly award winning, so bear with me. First up, insurer. This is the company that runs the whole system, collecting the money, creating the rules, and promising to protect you. Think of them as the ones who manage that big jar of funds. It's not done by a group of friends for sure. There are often government regulations around it. So let's call it this company. Next, insured. That's you and everyone else who contributes money into the jar in exchange for that promise of protection. So you and your friends are the insured. Then we have the policy. This is all this not just is just all this is not just a handshake deal. It's a formal contract between the insurer and the insured. It spells out all the terms, who's covered, how much, under what conditions, and so on. Think of it as a document. Cover. Cover is next. This refers to what is included and excluded in the policy. For example, it may cover damage to your car, but not your medical bills or towing charges. Next is a big one: claim. A claim is what you make when something bad actually happens. It's the moment of truth, when the insurer steps in and pays for the damage or loss as promised in the policy. Think of it as an event. Just one more, just to close it off: deductible. This is the portion you still have to pay, even after making a claim. For instance, if repair costs 1000 and your deductible is 200, the insurer pays 100, you pay the rest. Why? It helps prevent careless behavior. You still stay responsible. Now, all this was in the context of car. Now, all this was in the context of car. That's motor insurance. But the same idea applies to many other areas, like health insurance to cover medical costs, or home insurance to protect your house or mortgage against damages, say fire. And of course, the life insurance, where if you pass away, a pre-agreed sum is paid to your family. There are many types of insurance, but they all follow the same basic principle: pooling money to protect against the unexpected. So I hope you learned something new today about insurance and how it works. Thanks for watching.